We just saw today the head of the central bank in Brazil endorsing Bitcoin technology. And so the fundamentals are really good. We just had Larry Fink, and BlackRock, in essence, endorsing Bitcoin by saying that they're going to sell their institutional customers Bitcoin on the BlackRock private wealth management system. So what I see is Bitcoin emerging as a institutional investment grade asset being embraced by regulators, legislatures, and large-scale investors.
Much like other asset classes, the cryptocurrency market has had some very rough months in 2022, with most cryptocurrencies losing more than 70% of their all-time highs. But the worst seems to be over, and market sentiments show exactly that. For the first time since April, the Crypto Fear and Greed Index is in the neutral zone. After hitting a low of 6 in May, this is a vast improvement for the multifactorial crypto market sentiment analysis. In a recent interview with Daniela Cambone of Stansberry Research, Michael Saylor, the executive chairman of MicroStrategy, speaks extensively about what is to come for the world's largest cryptocurrency. Saylor explains that the bloodbath was severe for certain categories of investors, but it is now over. He adds that Bitcoin investors can now look forward to an influx of institutional investors as the cryptocurrency emerges as an institutional investment-grade asset embraced by regulators, legislators, and large-scale investors. Saylor explains that many of the finance big names are directly endorsing Bitcoin or talking about it. That includes Ray Dalio, the billionaire founder of the world's largest hedge fund, Treasury Secretary Janet Yellen, Gary Gensler of the SEC, George Soros, and giant financial corporations like JP Morgan, Goldman Sachs, and BlackRock. Saylor adds that all that is left is regulatory clarity, which would bring in hundreds of billions of dollars from investors. We will now take even Michael Saylor's interview as he discusses the oncoming influx of institutional investors into the crypto space. If you like this video, then consider giving it a thumbs up and subscribing to the channel. You can also drop your comments and observations in the comment section below. Everything helps with the YouTube algorithm, so we can continue to bring you these videos. Thanks and enjoy.
And now the market, I think, has probably bottomed, and it looks like it's just looking much better. It's gone from 17,000 up to 24,000 now. But I make the other fundamental point. If you're a short-term trader, this drives volatility, and this is very meaningful. And if you had a weak balance sheet, this is devastating. And if you trusted any of the crypto wildcat banks, right, it's tragic, right? And anybody that put their money in Voyager or Celsius or the like, or gave money to Three Arrows, it's awful. But if you look at the fundamentals are you have the head of the SEC endorsing Bitcoin as a commodity. You have the head of the CFTC, ready to endorse Bitcoin as a commodity. You have multiple senators endorsing Bitcoin as commodity. You've already heard Janet Yellen endorse Bitcoin as commodity. And the entire market's been very educated by this crypto crash. Now it's obvious to people the difference between, the good, the bad, and the ugly, right? The good would be a stable coin backed by cash equivalents that are transparently published every week, like Circle, right? The bad might be a Tether, which it works and they're competent, but it's opaque. And the ugly is the UST that just completely melts to zero. And you could likewise say Bitcoin is the good, right? It's a digital commodity, decentralized, with no issuer, without counterparty risk, non-sovereign store of value. And then you've got all the other creatures, many of which are unregistered securities. And this has lit a fire under legislators and regulators. I think they're going to accelerate all their regulatory initiatives. And that is educating the market. And ultimately, you have hundreds of billions of dollars that wants a long-term store of value because currencies are crashing everywhere in the world. And the thing that holds anybody back from buying Bitcoin is uncertainty about its classification and the way it will be treated by regulators. So as the regulation gets clarified and as people get illustrations of the difference between Bitcoin and Luna, right? It used to be people aren't quite sure about the difference. Well, in fact, a lot of people thought DeFi is better. You get a 20% yield on your DeFi and Bitcoin is dead money. And now they realize that, there is a counterparty risk to pursuing this. And this has educated the market, very, very effectively in a painful way, but in a rapid way. And I think it'll catalyze the maturity of the asset class and the institutionalization of Bitcoin to the benefit of the Bitcoin holders and the ecosystem.
As Saylor has explained, one upside to the bear market is how much it has shaken up the industry. As a result, investors will be more careful about the projects they invest in and, of course, be more wary of platforms offering unimaginable yields in exchange for their cryptocurrencies. The American investor also explains that as a result of the crash and the subsequent contagion that took out several crypto firms, legislators and regulators will be more incentivized to bring adequate regulation to the crypto industry. We saw this in the wake of Terra's crash. After the implosion that took out $60 billion, regulators in the United States, Japan, the UK, and many other countries embarked on various measures to avoid another implosion and protect investors. Unlike many other players in the industry, Saylor is pro-regulation, primarily because he believes it is currently the only thing stopping the big money investors from investing in Bitcoin. Let's get back to Saylor's interview as he speaks further about the future of Bitcoin.
So I think the worst of it is behind us, but I don't think that the industry has been clarified or completely rationalized yet. I think that there's thousands and thousands of cryptos that need to disappear, right? I think there's a 99% rationalization rate that needs to happen. And so I just think we went through an pretty important deleveraging. And I think the people will be much more careful in the way they view things going forward than they were a couple of years ago. I think we were in a Wild West stage the first decade of the industry, and I think we need adult supervision in the industry, and there's an entire generation of people that need to understand counterparty risk and basic risk management, and they also need to understand the difference between a security and a commodity. And with all due respect, there's still a lot of people that don't really understand the ethical or legal difference between a security and a commodity. And until they grasp the nuance of how you create a digital commodity, they're not going to grasp the way to segment the market and the right way to think about all these assets. And I think that we're still early days. I think that the institutional interest in Bitcoin has dramatically jumped in the macro community and the hedge fund community over the past year. I think you can see in the body language and the rhetoric of J.P. Morgan and Goldman Sachs, Jamie Dimon, and the way that David Solomon speaks about this, and the way that BlackRock speaks about it, and the way that Ray Dalio speaks about it, and the way that George Soros speaks about it. You can see that we're no longer at the stage where people are skeptical that it will continue to exist or skeptical of its value. I think it's now got the grudging respect of a lot of people. We're really more at the stage where we're waiting for regulatory clarity. There's just a lot of political debates, at the DC level. Over how much friction will be in the space. I think the banks would like to see more clarity from banking regulators about how much they can hold on their balance sheet and what the reserve ratio would be. And I think the accounting treatment clearly has been a liability for large institutions, because indefinite intangible is always going to understate the value, and it's also going to create it's always going to create confusion, because I could hold $1 billion and you could hold 100 million, and we would both look like we held 100 million, and you would have to dig deep into my financial statements to know the difference. And so it just makes everything hard and opaque. So I think that we have more adoption to come, and every single thing that happens, every time that there's an advance from the FDIC or FASB or CFTC or SEC or Congress, I think all those things are catalysts for adoption, and we're going to see more institutional adoption as time goes on.
While Michael Saylor seems confident that regulation will be beneficial to the cryptocurrency industry, many other market players are not. Some people believe regulation will dilute the industry's decentralized status, sending us directly into what we are trying to avoid. Others believe it would also leave the cryptocurrency industry as messed up as the traditional investment industry. Yet market experts like Saylor and Raoul Pal believe regulatory clarity will bring big money investors and exponential growth to the industry. What do you think? Is regulation what the crypto industry needs, or just a ploy for regulators to regain control? Please share your thoughts and observations in the comment section below. Also, ensure you hit the like button and subscribe for more videos. Thanks for watching.